So returning now to one of our top stories, the October inflation data has come in lower than forecast. It's risen to 6.9% in the year to October. Joining us live is Sarah Hunter, a partner and senior economist at KPMG. Really appreciate your time, thank you. Does this suggest to you that inflation may be turning the corner sooner than many had been expecting?
Yeah, I think broadly speaking, we are seeing the peak in inflation right now. And you're right, perhaps it is turning a little bit sooner and it might come off a little bit quicker than we were previously anticipating. I think it's worth keeping in mind that this monthly series that we're now getting from the ABS, it's very welcome. It's great to be getting more information and not having to wait on the quarterly numbers, but it is still new. We're still working out, frankly, how to interpret it, what data we do and don't get in each month. So we might see some volatility through the next couple of prints. But more broadly speaking, though, it does look as expected that inflation is sort of peaking right now and likely to be coming back down, and peaking for all the reasons that we expected. We can see the impact of the fuel excise duty being raised back up to its sort of previous level, and we can also see how food prices are playing through, and we knew they were going to be key dynamics through this last 3 months of the year.
And so what does this mean for the RBA? How significant is this set of data we've seen today for when they meet next week to make their next decision about interest rates?
I think what the RBA are going to be looking at is not so much actually some of the big drivers of inflation at the moment, particularly, as I said, food and fuel prices. Those things are not only very clear to see and we understand them, they're triggered by exogenous events the RBA doesn't have much control over, so the floods and what's happening globally. I think what will be more interesting for them in this data is what's happening to the categories that are much more influenced by domestic pressures within the local economy, so the education category, financial services, some of the other services groups that are very impacted by wages and other domestic pressures. There, we're not seeing much movement at all. We've still got heightened inflation coming through. A lot of those categories running at 4+% a year. So in the context of that and the other data that we've had just over the last month, I do think they'll go again and we'll have another 25 basis point rise next week. But we are definitely seeing, as your commentator in the previous segment said, signs that the economy is now starting to slow, that those rate rises are starting to bite, and that cost of living pressures are also pinging on households. So the signs are there. The transmission is working. It's just coming through with a delay, and I do think that that will reinforce the RBA's view that they can go at the normal pace of rate rises. I wouldn't expect them to flip back to 50 basis point moves, for instance, at this stage.
So, Sarah, when you were poring over that data a little bit earlier when it came out, did any other categories of spending stand out to you in terms of raising some eyebrows or looking different to how you might have expected?
Well, I think what's interesting is that we can see really strong seasonal patterns in some of these spending categories. Travel, for instance, the school holiday period in September was an exceptionally strong period of demand for travel. It seemed like lots of people, more than usual, took the opportunity to go away. Perhaps they couldn't last year because they were in lockdown. It'd taken them a while to plan the trip, and they booked it in for that period. And so we saw really strong price inflation in that category in September, and that price inflation really easing back in October. And so that's that kind of volatility that I was talking about earlier, and it's a new data set, and we just don't know how that's going to play through until we get a full year of data. We're not going to be able to see that as economists, and it's going to be interesting for us to discover how that looks month to month. What was also really interesting in this release was that we got the reweighting of the CPI. So every year the ABS looks at the composition of spending for households and sees how it's changed over the year, and it reweights accordingly. So it's a reflective of what we are actually spending our money on. Fascinating, we've seen foods share of spending has gone up, so that's going to have a greater weight in the CPI for the next year. We've seen the travel share has also gone up, but it's nowhere near pre-COVID levels, particularly international travel, still only just over half the weight that it was pre-COVID, so we're not back to normal there yet. And we've seen some of the other categories that can be quite important actually see their share reduce. So, for instance, the household services category has actually come down a bit. So it'll be interesting to see how those reweightings, because they're so large at the moment compared to normal because of COVID and COVID disruptions, that is going to have a bit of an impact going forward. And it's interesting. It'll be interesting to see how that plays through. For instance, with food, higher weight, and if we start to see some easing pressures, maybe that'll help bring the headline rate down a bit quicker again. So there's some interesting stuff in the details for people like me, as well as the headline moves.
Sarah Hunter from KPMG, really appreciate your analysis. Thank you.